Righto, buddy miners, we've got another Indaba episode. The fruits are flying off the tree out of Indaba, and we're heading into first quantum territory.
Yeah, mate, this was a really awesome chat that we got to have with Mike Christie. Mike Christie heads up the geology work streams, director of geology there. First Quantum are a company we should spend more time following because they're entrepreneurial. They build stuff themselves. Their geology team works across all of the company. Whenever they look at an asset, they've created serious value by buying assets, that are undervalued, like, developing mines in places that are usually too risky, sometimes losing their social license along the way. But it's a really impressive company, and I come out of that conversation with Mike just feeling grateful for having it.
Yeah, absolutely. Mike has he's written some punchy sort of thought pieces, I guess you could call them, on LinkedIn and the like. He's spent a lot of time, boots on the ground in, like you say, Trav, riskier parts of the world from the DRC to Zambia to Panama. But, by and large, they've got a lot of stuff done, and yeah, a real wealth of knowledge from the exploration front to, the geology sense in a much broader perspective. So yeah, grateful that we had the chance to pick his brain for a good 30 or 40 minutes.
Yeah, well, you can tell why they go overseas to the risky jurisdictions. They understand the risk because they know people like CRE Insurance are there to manage the risk for them.
They really
it's just
take the risk off your hands.
It goes hand in hand. They bloody ask Perseus and Waff how bloody good they manage risk. They're even doing Western New South Wales mining risk now with their Orange office.
Piece of cake after you've done
Western New
Africa.
South Wales has never felt safer. Never felt that risk mitigated.
First Quantum had a few hiccups in the DRC, but these days they're very, very comfortable and established in Zambia. In fact, you speak to Zambians, they think First Quantum is a Zambian company, but if they had CRE around back in the DRC days, I think things would be similar. They wouldn't have had to leave when they did.
Well, like it rhymes, DRC, CRE, like it's just a match made in heaven. So bloody keep a shout, go say g'day to them in Orange, and let's get into First Quantum.
All right, Money Miners, we've got a special guest in Mike Christie here at Indaba, a guest we've been thinking about getting on the show for quite some time, so we're excited we can make it happen. Mike works at First Quantum, has got a wealth of experience in exploration, geologist background, and has done a phenomenal amount for the sort of geosciences in Australia and in the broader exploration industry. So we're pumped to get you on, Mike, and we want to start the conversation going back to a LinkedIn post you wrote a few months ago about Western miners and sort of posed the question to you, have Western mining companies lost the plot when it comes to exploration?
Yeah, look, thanks, JD, Travis. It's great to be with you guys. It's strange we came all the way here to Cape Town to do it rather than doing it in Perth. But that post has really energised quite a lot of responses from a variety of people. And I think I started writing it just as an email to a colleague. And then I sort of started the thought process and ended up thinking, I might post this and see what sort of reaction I got. Because it was spurred by looking at a recent report from S&P, who do a lot of data analysis for exploration and cost of development and so forth in the copper world. And of course, copper in the last few years has been very much the metal du jour in terms of, we're going to need more and more of it for the electrical transition. And yet the discovery rate of what we would call world-class copper deposits has been inexorably declining. And so I wanted to really look at that in the context of what both the junior sector and the major sector were going through in terms of the change in dynamics, particularly in the last 10 years or so. And what we've seen is a whole new source of capital coming into the markets from the Middle East and from China. And we've seen the Chinese being very smart in the way that they have capitalized on new discoveries, particularly here in Africa, but throughout South America and things as well. And that hasn't necessarily translated into the exploration space. So that capital is not necessarily flowing into the traditional TSX or ASX juniors. And the majors seem to be gun shy of developing deposits. So they're waiting for the juniors to make those discoveries in the remote parts of the world that sometimes they're afraid to go to. And it just hasn't been happening. And you look at the graph of discovery success in the last 10 years, and it's miserable. I mean, Kamoa-Kakula was really the last big one. Other than that, a handful in the last 20 years of what we would call world-class copper discoveries, things capable of producing 250, 300,000 tonnes of copper a year. So that's really what spurred my post.
How much of this sort of comes to the point of permitting and approvals and that whole process taking longer and longer being a disincentive for majors, so the capital gets pushed towards brownfield expansion, exploring around the mine you've already got the permits for and set up? Do you think about that sort of balance much?
Yeah, no, the balance is certainly an important one. And undoubtedly the permitting and the social story surrounding modern developments is pushing out the timeline. In some cases, it will stop the timeline, and there will just be places we can't develop mines. But in many places, it really is about taking a discovery from those first few drill holes into a feasibility study, and then how long does it take from that stage, where you know you've got an economic project, through to actually building the mine. And that seems to be the phase that has been really pushed out. And typically in the copper industry, I think it's now running at about 17 years. So people say we need to double the amount of copper we're mining in the next sort of 20 years. How are we going to do that? Because we can't develop the quantity of mines. If it takes 17 years to do that, we needed to have discovered them several years ago, and that's not happening. So, yeah, it is. Big companies generally like stable jurisdictions, but it's interesting to see how even they are now extending into places like Argentina, and of course into Mongolia and to other countries whereby previously they would have been seen as probably off the radar. And some of those countries, like Argentina, is now really on a good path, and we're very comfortable there. So I think that the real gap at the moment is the funding into the junior sector, and so those discoveries are few and far between. And you saw how BHP leapt on Filo in South America. And I'm sure if there's a similar discovery here in Africa, we'll see the same thing.
You hit up First Quantum's exploration efforts and have for a long time. And when you think about who is most likely to discover, new deposits, new ore bodies, does it make more sense that it would be a major who has far better balance sheet and capability and ability to pay geologists and use the best data, etc., or is it just much more naturally fitting to the junior who has more risk tolerance?
It depends very much. I don't actually think it's a junior major thing anymore. I think it's more about the thought processes of what's going on. I mean, there are some wonderful juniors who are prepared to take risks. And what we've migrated through in the last 10 or 15 years is a transformation from geochemical surface exploration, which found an awful lot of ore bodies, as did prospecting before it, to more conceptual and heavy geophysics-based exploration. That's expensive, it's got a longer timeline, and it needs a real commitment. And I think that's where people like Ivanhoe have really won, because Robert Frieden was prepared to bankroll deep exploration drilling in the Congo in a way that probably very few juniors would have been able to do. So it's more about having that funding flow. So this combination of a junior working together in partnership with a major or a funding group, whether that be out of the Middle East, the Far East, or wherever, that combination can work really well. But this combination of having to go back to the market every few months and raise the next $1 million, the next $2 million, just to fund the next drill hole, that is where we're really seeing things come unstuck. Because unless the market gets the results every quarter, your share price dives, and you have to dilute the heck out of it.
You mentioned Chinese competitors in there, and we often see them pop up at the end stage, buying the project, buying the mine. Are there things the Western miners can learn from actually how they approach geology, maybe in Africa, other parts of the world? Yeah,
look, I think we've seen a big change there in the last decade as well. Generally, the Chinese companies were picking up established assets with a feasibility study and the sort of what you would call a low-risk investment. I think that's changed now, where they are putting in money at an earlier stage. But to date, we haven't seen that in terms of bankrolling junior exploration. I think there are some moves in that direction now. But the partnership that Ivanhoe made in the Congo was a very logical one, in that it was not a project they could afford to fund themselves. It was perhaps not perceived to be the safest investment destination in the world. So splitting that risk is somewhere where the market's definitely going to head. Even between major companies, you're going to see a lot more in terms of major companies working together in destinations where, to build a reasonable sized copper mine now, you're talking about things in the multiple billions of dollars. And if you've got to spend $10 billion building a mine somewhere in a remote part of the jungle of South America, then sharing that risk with someone is going to be on. So I think that's where the Chinese investment is been particularly smart in the last 10 years. They've started moving further down the curve in terms of the investment risk, and they're looking at projects that are probably pre-feasibility stage. And there are a number of those, particularly in the northern part of Latin America through the Ecuador, Colombia area, and indeed in parts of Africa. In the DRC, they basically wiped the floor. I mean, they've really managed to dominate the scene there, and we've seen the DRC's copper production treble in the last decade. So there's a lot to be said for that.
Thank God DRC copper production trebled, because that's a bloody cross-boundary energy. You're demanding a lot of copper wire for these hybrid power plants they're putting in all around the world. It is like, that is going to be full of copper. DRC copper, Australian copper, bloody every copper known to man. So, mate,
it's a circular reference. When we were in the DRC seeing some copper mines, you would see the power station supplying the power to the copper mine.
Exactly. And look, they are absolute global experts as independent power producers. And we're talking wind, solar, batteries, thermal base load, like the ridgy-dig power. So,
energy, they do it all.
And to penetrate the Australian market, they have made the first big decision they make to do that was hire the most exclusive business development person in Australia, and that's Tim Taylor. So you can tell this company is serious, because Timmy doesn't come cheap. So get in touch with Timmy Taylor and the CBE team for how they can give you some hybrid power.
Go CBE.
Tim knows power.
So I think they are making smart decisions, and one wonders whether the Western companies have sort of fallen behind that, in a sense that in some cases they have not invested in until almost it's too late. In other cases, they've probably made some poor decisions. And other than some quite inspired stories like the BHP Explore program, which I fully acknowledge as being a wonderful incentive for junior explorers, there's very little major support for juniors at that first sort of exploratory stage.
You refer to a bit of a change in approach to exploration, and I hate to bring up AI or machine learning, as it's a overused phrase these days, but I think it's particularly relevant here because there's people in the copper belt that have been quite loudly using this approach in how they, they've bought assets, but how they expand the assets and how they go about things. And I'm keen to learn from you how the average kind of investor can think about a company that promotes their use of AI in exploration broadly.
Yeah, AI, there's a lot of hot air about AI these days. It is a fantastic tool for speeding up the process, whether that be the exploration process or all sorts of other things around the mining. I've got two people on my team who've got PhDs in machine learning and AI, and we're applying those in very different ways. And to my knowledge to date, there have been no great discoveries by AI. Undoubtedly, some companies are employing the technology extremely effectively in terms of processing geophysics, in terms of accumulating enormous data sets, and making much more of them than we could through manual or analog ways in the past. So that, to me, is where the key comes in. and certainly we're beginning to employ that technology, and I'm seeing a lot of companies do that more recently. But I don't think at this stage it's not a silver bullet. It's not going to produce the X marks the spot drill here that people are talking about. Unfortunately, a lot of politicians, particularly here in Africa, have sort of assumed that this is going to be the manna from heaven, and they're suddenly going to be able to find every mineral deposit in their country. And we've been involved in sponsoring a large airborne survey in Zambia. It's a gravity magnetic survey over the traditional copper belt. It's actually the first time that whole area has been flown for 50 years. Partly because of the sort of mesh of small tenements and speculative landholders. So what we were able to do was fly the whole copper belt with the best resolution you can basically do, and come up with a holistic model. So, sadly, a lot of people then take that as, you must know where the copper deposits are. It's not that easy. There's a whole process after that of building a three-dimensional, sometimes four-dimensional model of that geological history of the copper belt, trying to understand what the relationships are between all the rocks before you can then start to get predictive about drilling deep holes. And we need to drill deep holes now because the big deposits have all been found. So you've got to translate that information into exploration targeting, and that's where I think the AI really starts to come into play.
We've been thinking a lot about where are the remaining big deposits still to be found, and it's not a very commercial question to ask, and but if the entire world was you could mine equally, the governments are all the same, drilling costs were all kind of equal, where would you look for the likely best undeveloped deposits?
Well, it sort of depends what you want to look for.
Copper.
Yeah, and you want big or small, and you want it in an open pit, or do you want it underground? At the end of the day, of course, what you want is something that's going to pay back money. In my view, really, if you want an open pit, large-scale copper mine, then the places in the world where you can find that near surface are diminishingly small. And it's come down to the jungle-clad parts of the Andes in the northern part of South America, perhaps Central America, and perhaps Far East Russia, if you're really keen. And I think those are really the only two parts of the world where you're likely to see that. I think there are very good prospects perhaps in Central Asia as well. And we've recently started an initiative in Kazakhstan, which I'm very bullish about. Most of the porphyries there are relatively low grade, but it's a good destination. The cost structure is very low there. The infrastructure is just fantastic. So there's the ability there to make lower grade mines work, I think. I guess the other part of the response is that what are you looking for? And are you looking for copper porphyries? Because we all know that the story of copper porphyries has been one of declining grade over the last 10 or 15 years. So now there is a litany of porphyry projects out there in the world at 0.2 to 0.3% copper, and most of them are going nowhere. It needs a complete step change in the terms of the copper price and or the operating costs of that mine, whether it's through new technology, employing all of the new tech that we like to use in some of our mines, the trolley assist, all of the electrical drills, electrical trucks, all of that, and that will bring the cost structure down. And I see more of an incremental change. So I'm not sure that we're ever going to really get down to the 0.2% copper porphyry mining unless there is a really quite significant uptick in the copper price, because nobody's prepared to make that big decision to go in to invest in those at the moment. So one of our big focuses is to look for sediment-hosted copper, which has typically a much more higher grade profile. Kamoa is the best example. And they're more restricted around the world. Certainly the Central African Copper Belt is the main example, but all the deposits through Poland in the Kupferschiefer, and indeed in central Kazakhstan are other good examples. So that's where we're putting a lot of our effort, is to trying to find those higher grade deposits, because still today grade is king. And if you want to develop a mine, as Ivanhoe have very well proven, if you've got 3 to 5% copper in an underground, you can develop that for much lower capital costs than you can with other with these big porphyries, which really is starting to cost tens of billions.
A bit of a different end of the mining spectrum, but on the plant side, with the tech advancements in processing and just extracting more and more out of what you've kind of got, are you bullish on that front at all?
Yeah, look, as I said, I think they're more incremental at this stage. I think if we get to the point where a sulfide leach technique is actually proven to work, and there's lots of people working on it, then you could see a step change in costs in the way that we saw with SXEW sort of 30 years ago, where suddenly all of these oxide deposits became economic that weren't before. And really that then kept the copper price down at about 60 cents for years and years and years, because there were major discoveries all through South America of these oxide cap deposits, and SXEW could process them at a very low cost. So if sulfide leach technology started to work and we didn't have to mill the bejesus out of hundreds of millions of tons of rock every year, then yes, that could make a step change.
I'd love to hear a bit about the relationship. This is a sort of question that's been inspired from a mutual friend, Ahmed, of your exploration team and the broader company itself, First Quantum. Keen to hear about perhaps what other miners can learn as it can improve exploration and discoveries across the industry, and how you guys sort of go about leveraging your expertise to its sort of maximum potential.
Sure, I guess there's several parts to that. Exploration has been very complementary to the history of First Quantum, which really has a bit over a 20-year lifetime, a company that grew very rapidly, but it actually originally grew out of building a reprocessing plant in Zambia, a small deposit called Bwana and and then exploration added to that by finding some deposits nearby, first Lonchi and then Frontier on the DRC side of the border, and it was a rapidly exploding story, and the cash flow from that allowed them to purchase Kansanshi, which was sort of the deal of the century. So it's been very complementary, and if you look at the history of the company, exploration has found about 5 million tons of contained copper, but brownfields exploration and essentially incremental additions to our deposits has added something in the order of 12 to 15 million tons of contained copper. So it's horses for courses, and that's what we're seeing around the world, is that actual greenfields discoveries are diminishingly small in compared to these enormous brownfields developments and redevelopments, as we're seeing particularly in Chilean places at the moment. So for First Quantum, our job throughout that period as an exploration group has really been threefold. One, to go out and try and look for the Holy Grail, the big new development, 10 million tons of copper or more. Those are very, very rare discoveries, and we know that. So in the meantime, we spend a lot of time trying to add value to our existing deposits. We've had a lot of success in that area. Just a recent discovery near our little Çayeli mine in Turkey, which is going to add 10 years to the mine life. It's fantastic, and the guys there who are looking at basically finishing up this year have suddenly got a whole new future ahead of them. And we've added a lot of life to places like Kansanshi, and we're working very hard now at Sentinel in Zambia to increase those brownfield tons, which once you build a plant, it's where all the value is. The third part is really about assisting our business development team, and First Quantum has acquired a lot of copper through M&A over the years. I think it's something in the order of 60 million tons of contained copper have been acquired through that period. And we don't have geologists in a specialist M&A team like some of the bigger companies do. We basically my guys, the exploration guys, get pulled out of the bush to suddenly go and rush in to look at a project in Brazil or Kazakhstan or wherever it happens to be. So we're a very integrated part of the corporate development, the business development side of the company, which is not something I've seen very much in other companies. They tend to have these silos of different groups who don't always talk to each other, I think that's one of our successes. We've been able to manage that process and be able to really understand the risks involved for pretty early stage projects in some cases. Sentinel in Zambia was a good example where it had a handful of holes in it. We went in and looked at it and thought, wow, this looks like this actually could be quite substantial. And I was all in favour for a joint venture. I went back, talked to my boss, and he said, no, bugger it, we'll buy it. And we paid $240 million about 3 weeks later and bought this thing with no real resource on it. And we built a $2 billion mine on top of it within 2 years. So that sort of quick decision making and the ability to act really fast on the technical advice of a geology team and an engineering team has, I think, stood us very well over the years compared to the bureaucratic process in a lot of the majors.
It's really interesting. You talk to geologists and you ask them, which of the producers, like major producers, would you actually want to work at? Would you feel like you're maximising or utilising your skills and having a crack, maybe find something, and First Quantum always comes up, as opposed to the others where maybe you'll be, that's iron ore, that's not, if you work as a geologist for a major or anything like that. But it's the propensity to take risk that kind of keeps popping up in a recurring way. That propensity to take risk that's kind of inherent to First Quantum has also led to some challenging times as well. Not just the Cobra Panama issue, which is super recent, but Frontier in the DR it wasn't Frontier in the DRC. It was Frontier, where the license was revoked back in 2009.
Yeah. So yes, we take a lot of risks, and if you don't take risks, you go nowhere. I was having the conversation with some of the juniors here at the conference in the last few days, and some of them spending their last dollar to drill the last hole. But it's like, well, they could choose to spin that out over a year or two. So First Quantum has grown out of taking risks, going where others fear to tread. And I think going into the DRC in 99, 2000, when it was just recovering from a civil war and everything else, that was a really gutsy move. And people said, well, we built 2 mines there. We were in the process of building a third. And people say, oh, geez, I bet you wish you'd never been there because you lost the assets and everything else. Well, if we hadn't done that, we wouldn't have had the cash flow to build the company in the way we did. So it's a two-edged sword that you take the risks, and certainly building a $10 billion mine in Panama is a significant risk. We're optimistic that situation will get resolved. But in the meantime, the company has this ability to pick itself back up off the floor, dust itself off and go look for the next great thing. And we're in a very lucky situation that we've got 3 potential substantial copper deposits to build between Taca Taca in Argentina, which is probably the next one off the rank, Haquira in Peru, which we've had for a number of years, and now a joint venture with Rio and La Granja. So not many companies have that sort of pipeline of projects to back them up. But spreading that risk into different jurisdictions and now through partnerships with people like Rio, that's going to become an increasingly important part of the equation, I think.
Mike, you've got years more experience on us. I'm very interested to hear your view on that boldness you speak to in the mining industry. The industry, particularly in Australia, I think, prides itself on the characters and these sorts of people who took a lot of risk and were successful. You don't talk so much about the ones that weren't. But has that changed over your career? Do you think that boldness is missing?
Yeah, look, I can only speak from my personal experience. I started out my career with Rio Tinto. On a technical level, it was fantastic. I mean, I learned so much in 10 years with Rio. But then I worked in several companies after that, which had a real risk aversion. And I was working at increasingly senior levels in companies, working with a board who I would present multiple opportunities to that I really thought were a slam dunk. They just weren't prepared to go that last mile to make the investment. And you don't win them all. You can't win them all. But I think now we're in this situation, as I mentioned before, where I think a lot of the majors are really gun shy to go out and do these big developments. So, they're much more comfortable about putting their money into brownfields expansions at Escondida or wherever. But Escondida can't expand forever. There is a limit, I think, to that equation. And the grades are getting lower and lower, and power costs are going through the roof. And I think people just really have to look now at balancing that equation with probably what is going to be a lot of deep drilling in new environments to try and understand where these the deeper deposits are, because and how to mine them more effectively. We've got really only 2 or 3 companies in the world who are really good bulk underground miners, and that IP was in Newcrest and now wrapped up in Newmont, and I'm sure they will do well with it. Rio's busy trying to develop that at Oyu Tolgoi. So I think that's the area technologically where we really need to be looking at, because I think the days of finding these big multi-billion ton open pits near surface are disappearing fast.
Block caves that are deep and with little surface mineralization. It's a different payoff profile as well, right?
Absolutely. And I remember the early days of Sol Gold. I'm talking to Nick Mather at the time when he was drilling some of the first holes there at Alpala, and it was like fantastic holes. Nick, well done, And he was saying, yeah, but nobody's taking any notice. And of course, eventually the world cottoned onto that story, and the share price went ballistic for a while. It's come a bit down to earth now because of the reality of developing something like that. And it's one thing doing it in South Australia. It's another thing trying to do it in the high Andes of Ecuador. And there's a lot of sensitivities around that. And you've seen how Rio struggled in the early days of Oyu Tolgoi to make that block cave work. They had to redesign the whole thing, as I understand it. So it's not a simple equation. And you look at projects like Pebble and Resolution and some of those have sat there for 30 years or more without being developed. So they will happen ultimately. But the risk profile in that versus going out looking for new higher grade underground deposits is what people need to be thinking about. I don't know that people are really appreciating that equation. So hence our push into sediment-hosted copper territory. It's a very different exploration model to a porphyry. Instead of looking for a nice bright magnetic blob in an image, you're basically having to build a whole geological framework picture of a sedimentary basin and try and understand what the fluid flow was in that basin. It's more like oil exploration in a sense than traditional copper exploration for porphyries. So it's a very different equation in that you've got to, it's a long time frame, it's a lot of deep drilling and a lot of dusters on the way, but you use that to build your geological picture. So hopefully we can find more sediment-hosted copper, which in an underground mining perspective is a far easier proposition, and we've seen that from the really quite wonderful development at Kamoa, which I think Ivanhoe and Zijin really deserve some pretty good credit for. They have done that at a minimum cost for the amount of copper production coming out of that, and it's about grade and it's about a very slick development.
What's the best thing that the industry could do to improve the probability of success with exploration?
Take some risks, and
Better risks.
Better risks, and really focus on science. I see many junior proposals come over my desk, and my team goes and investigates them all over the world. And a surprisingly small number of them are really using top-class geoscience to understand what they're looking at. They're rehashing old data. They're taking soil samples or rock chip samples in an area that's been well sampled before. They're drilling shallow holes. They're not really conceptualizing what could be. and they're desperate just to get that next drill intercept out into the market. So it's not really, and I blame the market for that in a sense, that it's just driving this short-term news flow rather than trying to encourage a company like Philo to go and drill their 1.5 kilometre deep hole to look for the next best thing. So I think since that discovery, everybody with a dud porphyry in the Andes is drilling a lot of deep holes underneath, trying to find out if there's a mother lode there. So that's good, and hopefully there will be some more discoveries like that. I still think that project is going to be decades away before it actually produces any copper, but it will be a world-class deposit for sure. So I do think that some enhanced geoscience, and I think that's where the majors have a really big part to play. You know, we pride ourselves, and I know Rio and BHP and others do as well, on having top-class teams. We really try to have the best structural geologists, geochemists, and now increasingly people with AI and programming skills to synthesize data and make the best predictive models we can. But you know, there's a limited amount of crossover between them and the juniors that have the ground. So we've got to make that process work better.
Last one from me, Mike, coming at it from a financial lens, is there an over-reliance on NPV analysis and IRRs? Does that forget the optionality that's inherent in long life projects?
Yeah, and it's a question we ask ourselves, and I think particularly people like BHP must ask themselves it all the time, because you know, they're looking at assets that they want, multi-generational assets that will be there for 50 years, and so do we. But when you calculate those things on an NPV, the future returns more than 10, 20 years away, they diminish to the point of not being very useful. So you've really got to get your capital back. I think that's where the Chinese have won, because they've been looking at it in terms of copper production and revenue rather than an NPV basis. Everything is driven by revenue in China. And that's just a function of the way the politics works. So they will build an asset that will have a long future cash flow without really worrying too much about the payback on that. And that's the difference. And I think that's where they've been able to take some risks that we haven't. So yeah, it's a hard one. I think the real restriction at the moment, it's clearly not a lack of copper deposits. The world has lots of them. It is the really rapidly escalating cost of the capital. And if we look at it over the last sort of 15 years or so, we've seen the cost of capital treble or quadruple for an equivalent development, where operational costs might have doubled in that time, the price of copper's doubled in that time, but the cost of building these big deposits, partly because they're low grade, and partly because they're in pretty difficult parts of the world, has gone up by 3 to 4 times. So we're now talking about $30,000 per tonne of copper production a year, whereas when we built Sentinel, it was around $7,000 or $8,000 a tonne. So your payback was, you know, copper price at the time was probably 4.5 or 5,000. Your payback was a couple of years away. Now you're talking about not getting a payback for, you know, really quite a long time. And that applies to the brownfields developments. You've seen some of the announcements recently by BHP and Codelco in South America, and they're vast tens of billions of dollars going in basically just to keep level production going over the next 10 years.
Still declining.
Yeah, so it's a diminishing equation where you're having to spend more and more capital to get that production, even to keep it going, but certainly on a greenfields development. And that's then stopping companies going ahead to build them. So they're just investing the capital in expanding what they've got. So yeah, it really, I'm not a great believer in the copper cliff, because I've been in the copper game long enough to have been shown these diagrams of peaking copper a few years away and how it's all going to fall off a cliff, and it actually never happens. I could show you some from 15 years ago that said it was by 2025 would be have a really diminishing profile. But we continue to grow that copper production every year by 2 to 3%. But it's largely around discovery of near mine resources and expanding those operations, not through greenfields. Greenfields is making a really small contribution to that.
Fantastic, Mike. We're pretty pumped we could finally get you on the show, so thanks for making the time for us.
Yeah, pleasure. Great to be here.
Very, very good. Bloody fancy background there. Love the. I hear that background may have been used on publications.
Yeah,
I'm grateful we got to use it once.
yeah. I'm curious to see where it's popped up, but a few other people use that
There's
room.
a lot of interviews in front of it.
Credit to the Ed Narber team for putting it there for us, but yeah, maybe you might see it in a CNBC interview sometime.
I love seeing. How good's Jim Cramer? He's funny. I've been all over CNBC. I can picture that'd be me when I'm older.
Yeah, I didn't see him there, but same, hey?
He might have saw you, but JD.
It's true. It's true.
Right, thanks to all the bloody partners.
Mineral Mining Services, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, Saltbush Contracting, Swick, Quattro Energy, and at
Quattro Project Engineering. Fuck. That'll do. Quattro Energy. Hey, there could be an offshoot.
My mind was moving already ahead to who we had in the show. Cross Boundary
Energy. And $100 off your IMM Underground Operators tickets. Use the code MOM100. It's $300. Hoodaroo Money Miners.
Hoodaroo.
Righto, Money Miners. Little special treat at the back end of the show here in the lead up of Underground Operators Conference, IMM Adelaide, April 7th to 9th. And we've got one of the big dogs, one of the, one of the best friends of IMM, you'd say, Epiroc. Now, and representing Epiroc today, Martin Wallman, the Global Portfolio Manager for Underground Trucks, dialing in from the Northern Hemisphere. Welcome to Money and Mine, Cobber.
Thank you very much, and thank you for inviting me.
Oh, an absolute pleasure. Thank IMM for that, mate. Mate, it's last Underground Operators Conference a couple of years ago. I guess the feel of the industry in terms of automation, electrification, haulage and everything's probably changed a lot. How much has it changed from the Epiroc side? What are you seeing, the big ticket items at the moment?
I would say, the main focus is still electrification and automation. That's still the big thing. Of course, we have continued to develop our machines. Our customers, I would say, they have also started to get more and more used to operating electrified machines. So that's small step forwards around for both us and our customers.
Yeah, right. So what specific machinery are we going to see? Normally you guys have just I don't know how you get the machines in there. What is going to be the showcase item?
For the mine, starting with the mine tracks, we will not have the machine. That machine will be shipped to Australia later on this spring. But that is a completely new mine track with a new frame, basically a new cab. But the big thing is a complete new drivetrain. We have removed basically all the moving components such as shafts, transmissions, axles, and those things are replaced with electrical motors. So we started with the diesel engine, but that's kind of the only thing that the component that is the same as previous model. But the rest is new. And then we do similar things for the loaders, but then we're still keeping a transmission. So that's a big thing within the material handling. Then of course we're doing similar. I shouldn't say similar because it's not the same thing, but we are electrifying the drill rigs, of course, and that is what we will display at the show.
Are we offering any discounts in Adelaide for purchase of this equipment? It's like 20% off or something. Usually you've got everything on show you want to sell.
It's more than welcome to come and talk to us, and we will see.
Righto, mate. I'll bring him to you. Right, mate. Well, I look forward to seeing you in Adelaide, April 7th to 9th. Cannot bloody wait. Have you been to every Underground Operators previously?
So this will be my first time. We will have a big group of people coming over from Sweden, so everybody's more than welcome to join us.
Mate, you come
have a good discussion.
Hang around me. I'll give you the guided tour.
Absolutely.
We'll have a great time.
Absolutely.
Right, thanks very much, mate. Look forward to seeing you.
Thank you.
Go
See you in a couple of weeks.
See you,
Bye.
mate.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.